Thanks for joining us here on Live Now from Fox. I'm your host, Anna Marsick. Let's start right now with a live look over Capitol Hill, as we did learn today that interest rates are staying the same. And just before Jerome Powell's press briefing that we were just listening to got underway, the Federal Reserve had announced that decision following a two-day meeting. So joining me today to break down what we learned is Dan Varroney. Thanks so much for being here today.
Pleasure to be with you.
So first things first, we of course learned today those interest rates are staying the same. So let's break down, what does this tell us about the U.S. economy right now?
So a couple of things. So there's two sides to this, Anna. So on side one, it's the energy price shock. The energy price shock is absolutely influencing and driving these price increases in terms of the cost of fuel, the cost of diesel, the cost of goods, and the cost of food. That's what the Fed is concerned about. They're uncertain about where these price increases go. And there's uncertainty because none of us know where the is or isn't going to end or not. So at the end of the day, that's one clear concern. But in terms of the underlying economy, there's strength there. Retail sales are strong. Capital investment is strong. The housing starts came in way above expectations today. Durable goods orders came in way above expectations today. And the consumer is still spending money. And that's very good news because we're a consumer-driven economy. So there's two sides of it. Good news in the economy, but challenges with regard to the energy price shock and uncertainty.
So we know that the Fed has to balance creating jobs and keeping those prices stable. How does today's decision balance those two goals?
You know, I think that's an interesting question because on the price stabilization side, they believe from their perspective that their policy was restrictive enough on the pricing side. So they believe that by keeping it where it is, that would continue to put a ceiling somewhat on prices. On the jobs side, what the federal chair said today, and the facts bear this out, is the job market per se is not cracking. Jobs are being created slowly, I might add, and at the same time, there's not a lot of people at a high volume losing their jobs. So it's really sort of a balance point. They believe their policy is restrictive enough for the time being, and the jobs market is not cracking.
So we know that Jerome Powell's term is ending May 15th. This was likely his final meeting before Kevin Warsh could potentially take over. To what extent do you think today's decision was influenced by a desire to maybe provide a steady hand transition?
You know, I think that every Fed chair, as part of their handoff, wants to provide a steady transition. He's been in his role as chair of the Federal Reserve for 8 years. And I think that there's a lot of pride in that. And I think that he wanted to leave a measure of stability with his successor, which will be Kevin Warsh.
And Kevin Warsh had previously questioned the traditional 2% inflation target. Do you think today's statement leaves the door open for the potential Warsh era to maybe even redefine what price stability actually might look like?
You know, another good question. So if you look at it through the lens of today's Federal Reserve, they would say there's energy shock, higher prices, and uncertainty, and we need to keep our powder dry for the time being. From a Kevin Warsh perspective, he sees things differently. So, for example, do we have enough of the right data? Some of what Kevin Warsh had said is that the data we're using is in the rearview mirror. I think Kevin Warsh is going to introduce new data sets and try and introduce forward thinking in all of the Fed's deliberations moving forward.
So we've been above that 2% target for about 5 years now. Is today's hold a sign that the Fed has quietly just accepted 3% as a new 2% in a war-torn global economy?
You know, I'm not sure that they've accepted it because it seems that we're not going to see the Fed minutes for the next several weeks. But when we do, my sense is that we're going to see some back and forth and maybe some people saying, well, we know for a fact that some people changed some of the language in the Fed messaging. So I think that there's some people that have got their concerns dialed up in terms of their uncertainty. But I don't think as we move forward that things are going to stay as they are.
How would you say today's decision impacts small businesses? As Jerome Powell says, the U.S. economy is expanding, but inflation has moved up with growing global energy prices due to the uncertainty there in the Middle East.
That is my favorite question of this conversation, Anna, and here's why. So small business represents 45% of the U.S. economy. 2 of 3 new private sector jobs come from small businesses. With the big, beautiful law and the 100% expensing for both plants and equipment, small businesses are being held back. And with 33 million small businesses, we don't want them held back. Right now, they've got, when they go to get a loan, they're paying between 8 and 9%. And as a result, the Federal Reserve is literally keeping a sort of a chokehold on small businesses. Small businesses are the growth engine of our economy. And I believe, from my perspective, if our economy is going to grow at 3% or greater on a consistent basis, we've got to take the handcuffs off small business. The first way forward is to bring those interest rates down. And, like today, the Federal Reserve kept their discount rate at 3.5 to 3.75%. I believe, from my perspective, that ought to be at about 2.5 to 2.75%. That will bring the interest rate on loans down and will open the doors for small businesses to go out and invest more widely.
So on your screen right now is an X post coming from the Associated Press earlier today saying the Federal Reserve keeps key rates unchanged even as 4 officials dissent. That is the most in 34 years. So the vote today was an 8-4 split with those 4 dissenters today, which is, like that post says, the most in 34 years. So is the Fed itself too divided to even consider a December cut?
I don't think that's the case, right? So when you look at it from a data perspective, right? So these decisions are all about data. And all the data they've been utilizing is in the rearview mirror. There are now things like real-time inflation metrics. What if we consider that data? And if we consider that data and other real-time data in terms of how the PCE is calculated, maybe things will look differently for the Federal Reserve. So I think they are accustomed to looking at things one way, but there may be another way, another more efficient, more effective way with better, more real-time data that will create a bigger, broader discussion around how rates should be decided. So I think, from my perspective, I think we're in a time of change and we're in a time of transition. And one of the things that, when we're looking at transforming and going to a different level and looking at things differently, that we need to be innovative in our thinking. I think having new data will provide that innovative thinking, and I think will take some of the division away. So now, one qualifier I want to add, one of the 4 people who dissented today wanted to cut rates by 25 basis points or a quarter point. The other 3 had a problem with the language in the statement that was released by the Federal Reserve.
So Powell had said that he is going to stay on the Board of Governors until 2028 potentially. Does that create an awkward dynamic for potentially Kevin Warsh, where the old boss is kind of literally sitting across the table watching every move?
Well, let me just say that Kevin Warsh is positively brilliant. He's been absolutely successful in the private sector. He's built wealth. He knows what big ideas are. He knows how to work with people. And I have high confidence that he's going to do really well. I think for Jerome Powell, my take is that he ought to celebrate his 2 terms, his 8 years, thank the Federal Reserve Board of Governors and the Federal Open Market Committee for all their service, and move on to whatever he's going to do next.
Is there anything that you're keeping an eye on as we near the end of Jerome Powell's term?
Yeah, I absolutely think so. So the thing that I'm looking at, I'm paying very close attention to. So Brent crude was as high as it's been per barrel since 2022 in 4 years. I'm going to continue to take a very close look at the price per barrel of the Brent crude and the WTI crude. If those numbers stay contained, I think it'll be okay from a Federal Reserve perspective. But if those numbers go much higher, I think it changes the complexity of the discussion at the Federal Reserve.
All right, great conversation there with Dan Varroney as the Federal Reserve chooses to leave the interest rates unchanged. Thank you so much for your time and expertise. We appreciate it.
Pleasure to be with you.